Hello, it's me, Joe Polyak with Rise Homes here again, giving you another San Mateo County real estate market update. So this data is for the month of June 2020. Right now, as I'm shooting this video, it is July 15th, about 1:45 p.m. And so the data itself is for the month of June 2020. So let's jump right into it. I am here outside because it's a nice, beautiful day. It's in the middle of July. And as you know, San Mateo County, Mid-Peninsula, San Mateo, Burlingame, San Carlos, Belmont, and Redwood City may just have the best weather in the world. So let's jump right into it. So I received the data, and once again, thank you very much to Acculist, the data provider for San Mateo County Association of Realtors and MLS listings. And specifically, thank you to Michelle Ronco. I send her an email every time they put out one of these videos with all these slides, and I say, hi, can I please get these awesome slides? And she sends it to me right away. So Michelle, thank you so much. If you're watching this, I'll send this to you and make sure you watch it. And thank you very much. So let's go through this, and we're doing something a little bit different today, where we're doing the screen share at the same time as the video is playing. So we're gonna have our editor edit this up and make it look good for us. So please watch the video and then give us some feedback about the video and about the content, and see how we can improve and what I can do better, because that's my goal, is always continuous improvement, Kaizen. So let's jump right into it. So San Mateo County, June. Sales volume since 2015. As you see, that the sales volume in 2017 was at its peak for June. So that looks like a number of, let me see if I can zoom in here a little bit, $882 million for the month of June in 2017. And then since then, it's gone down a little bit every June since. And although in June 2020, our total sales volume was $766 million for 2020, month of June, versus 2016, $755 million. Now, sales volume is simply all of the sales prices of all the homes that sold in the month added up together. So it is likely higher in 2020 than it was in 2016, because the prices have gone up, as you will see in just a bit. So let's take a look at the San Mateo. So this again is the data for single family homes. I can do condos if you'd like. If you'd like me to do another video on condos, I can. That's probably going to be another 10-20 minute video. So that's why, in the interest of time, and because the data for condos is probably going to be similar to that of single family homes, I'm just going to do single family homes for these market updates. But I'm always happy to send you the data. I'm always happy to talk with you in more detail if you give me a call. All my clients, friends, family will tell you that as long as I'm not in a meeting with somebody else or shooting a video like this, that I'm pretty easy to reach, and I'll get back to you most of the time of the day, unless I'm asleep. So let's take a quick look at June of 2018. We see that the median sales price was about $165. Then June of 2019, the median sales price was 1.605. I think it was actually a little bit higher than that, like 1.620, but right here on this chart it says 1.605. So as you see here, June 2020, the median sales price in San Mateo County was 1.735. What a crazy increase on the heels of shelter in place. We're still in shelter in place. A couple of days ago, Gavin Newsom issued executive order for the state that everything needs to close back up. So it is, in my mind, pretty mind-boggling that prices have increased so much, or that they've bounced back, or year over year that they've increased for the month of June. To me, that's pretty insane. So let's take a look, especially when you look at, and here's probably why this is happening, is that when you look at June closed sales since 2015, you'll see 2016, 453. I believe, if my eyes are not killing me, 497 in, sorry, I realize I'm doing a screen share here, so you guys probably want to see that. So 497 for 2017, 2018, 433, 495 for 2019, and 349 for 2020. So keep in mind again that this is closed sales. So for example, if a home went on the market in April of 2020, let's say April 15th, 2020, the previous tax day, no longer a tax day, because July 15th is our new tax day. Today, happy tax day. April 15th, let's say a home hits the market and it takes, let's say 2 weeks to sell, which is about the average. So it's sold on April 30th. Okay, so on April 30th, offer was accepted. So on average, the close of escrow timeline is right around 30 days. So that home could have sold anywhere from May 25th to June 5th. The escrow could have closed. So what we're seeing here when we look at these closed sales are homes that actually really accepted an offer, maybe like a month, at least 2 weeks, usually at least 2 weeks, to anywhere to a month to even 45 days after the actual offer was accepted. So when we see that the closed sales are 349 for June 2020, that means that those homes likely accepted offers sometime around late April or in the month of May of 2020. So keep that in mind. So that's kind of like a lag measure, I guess would be the correct term for that. Now, let's take a quick peek. New listings that hit the market. This is gonna illustrate a lot for us. The reason why I think I'm not a statistician, I am not actually incredibly knowledgeable on this topic. So people who are in the finance industry, who are in statistics and are watching this video, if you can give me a little bit of pointers or some help with this on how you can analyze the data a little bit better, I always appreciate, again, continuous improvement and help with the things that I am doing. It would be really helpful. So let's just take a look. So with that being said, I look at the month of June in previous years. You compare the month of, because that's a more realistic comparison, because there are seasonal changes, right? Less people put their home on the market in December than they do in April, for example. So let's take a quick peek here. So I'm looking at June of 2018. It looks like 492 homes hit the market in June of 2018. In June of 2019, it looks like 452 homes hit the market. So what you see here is that usually around April, May is when the most homes hit the market, or you know, those are around the peaks. And then it drops off into the summer months with another pickup around, it looks like September. And that's usually what happens. And then obviously a drop off in December. So as we see here, picks up, and the peak is April, or no, that's May. And then June 2019, 452. What happens here? 518 new homes hit the market in June of 2020. That's not a lag measure. That's when homes hit the market. So that's showing that supply has increased significantly in June of this year. So that's going to be interesting to see what that does to the data in the coming months, seeing that how many, the sharp increase in the number of homes that have hit the market. Sales to list price ratio. So we have been for many years now, since probably 2011, 2012, 2013, in you list it low and you sell it high kind of a market, where the average basically was about 10% over asking for most of the time. And it looks like that data is kind of reflective here, except for that slowed down last year. It was super crazy 2014, 2015, 2016, 2017, 2018. Those years we had incredible listed for $999 and sells for 1.3 kind of markets, and that was standard operating procedure. And then in 2019 that dropped off to, as you see here, from being on average in the county, homes sold for 12% above asking, 13% above asking, 12% above asking in June of 2018, and in those early months of 2018, to a drop off of June 2019, 5% over asking, now to only 1% over asking, with many cities selling well below that. So let's take a quick look. So this is now, we're just breaking down the cities. I'm gonna again try to get through this a little bit quickly and just point out the big ones. So Woodside, Belmont saw an incredible increase in median price from 1.7 to 2.135, and that is for, I believe, median sales price same time last year, June of 2019 versus June of 2020. Atherton, of course, Montera, Burlingame from 2.2 to 2.6, incredible increases in median price. La Honda And wow, East Palo Alto dropped significantly. What that's telling me, my friends, if you have some money to invest, you are thinking about investing, East Palo Alto might be the way to go. Facebook headquarters, rejuvenation of the entire area. I mean, it's just, I think that there might be some money to be made there. So if you are thinking about investing this year in the Bay Area, although we don't have the greatest cash flow numbers, it's still probably a good place. I think East Palo Alto might be good. So hit me up. Let's talk about it. Okay, and then we see some drops. Daly City, San Carlos, Portola Valley, Redwood Shores, big drop for single-family homes. I think that's just because a lot less of the big time. There was a lot of big waterfront homes, I believe, that sold in 2019, 2018, and not as many 2020. So, okay, that's fine. Again, this is month-over-month statistics. San Mateo County increased median price month-over-month. Okay, Brisbane, well, we're not going to, that's a very small sample size. I think they sell like 2 homes a month, maybe 3. Half Moon Bay, a month-over-month. South City, month-over-month, major increase. I'm outside, so if you hear the kids on the bike, that's what that is. Maybe we'll invite them over, teach them a little bit of real estate statistics. Nothing more fun than that. Burlingame, month-over-month. Okay, let's see the decreases in median price month-over-month. That's what that MOM stands for. La Honda again, Woodside again. Well, Woodside is on the other side. Atherton down from 11 million to 6. Again, these are mostly the small sample size cities where like maybe 3 to 5 to 7 homes sell per month. So it's not big enough to really chart any kind of meaningful data from that. So, but East Palo Alto, EPA, decrease, median sales price decrease from 1,020,000 to 836. Okay. Daly City, Pacifica, that's interesting. From 1.3, can you imagine $1.325 million median sales price in Pacifica, and now it's down to 1.2. Crazy the times we're living in. Median price CT, you know what, to be honest, I don't know what that is. Oh, condo townhome, sorry, that's what that is. Okay, got it, we're taking a look at those. All right, we'll breeze through again. East Palo Alto. Oh, that's an increase. Okay, but not too many sell. I sold a townhome in East Palo Alto, but that was in May. We closed escrow in May, also, I believe, not June. So, okay, increased closed sales. The number of homes sold. Portola Valley, 19 sold this year instead of 5. That's insane. 19 homes sold in Portola Valley in June this year. Redwood Shore, some other increases. Nothing too meaningful here. Everything is kind of the same. So I'm just going to breeze right through it. Decreased closed sales. Belmont, my city, where I live, only 9 homes sold in Belmont in June 2020 versus 2019. And San Bruno, another major one. And that's, I mean, that's, you attribute that to the pandemic. All of this is to the pandemic. People who didn't need to sell, who were not in any kind of time crunch, they're like, I'm not going to sell during this pandemic. I'm just not going to do it. And I'm not going to put it on the market. And that's what happened in Menlo. That's what happened in San Bruno. That's what happened in Belmont. That's what happened in San Mateo. A little bit in Foster City. A little bit in South City. A little bit in Burlingame. And that explains that. Redwood City, another big one. Increased closed sales. Now I'm going to kind of breeze through these in the interest of time to not talk too much, as I always do. If you want to hear me talk too much, feel free. Give me a call. I'm always here. Increased new listings. Yeah, so obviously that's going to be all across the board. So many homes hit the market in June compared to previous Junes, compared to previous months. And we saw that in the other chart. There's no reason to continue that. I forgot what the expression that people said, but we're not going to use that because it's probably incorrect in June, politically incorrect in June 2020. So we're not going to beat anything with anything. If you know the expression I'm talking about. Increased new listings month over month. Okay, more. Oh, that's month over month. Yeah, I mean, it's just crazy, of course. So, I mean, I'll just look at it. Look, 44 homes hit the market in June of 2020 versus May. Hillsborough, 23 versus 14. South City, 26 versus 16. I mean, it's just, it's crazy. Condos, townhomes, same thing. I mean, you can imagine. Increased days on market. See, that was a little bit of an increase. So La Honda, Woodside, that's not a big deal. Millbrae, that's a major one. Millbrae's been a hot market. It's been a leader in the Mid-Peninsula hot market. Prices have increased like crazy. Millbrae was probably a lot closer to a San Bruno type of market than a Burlingame. Now it's probably closer to a Burlingame. When you look at the data and you look at the prices and you see the quality of the homes and all of that. So, but nothing to say bad about San Bruno, just San Bruno tend to be more of a North Peninsula kind of market, like a Daly City, South City, Pacifica. San Bruno is kind of that next logical one. Millbrae was more similar to San Bruno, I think, historically, and now it's jumped ship to that Burlingame, San Mateo, Foster City, Belmont, San Carlos, Redwood City type of a market. So that's what we're seeing, but decreased days on market. Okay, I mean, everything is just picked up and hot, and I mean, it's to be imagined. We went into shelter in place on March 16th. So shelter in place, people are sheltering in place, doing nothing all day, sitting at home, Netflix, reading, improving themselves, whatever, all day. And then board come end of April, and market just heats up, and people are not losing their jobs, and they're buying. And everybody's asking me, what's going on with the local real estate market? Has it crashed? Are prices going down? Well, as I'm showing you here, prices have not gone down. Nothing has crashed. What's happening is that the main employers in our area have not really let most people go. They're still making the same income, if not some bonuses, and they're just able to work from home. So if you're making the same amount of money and you're able to work from home and you don't care about a commute, then it turns out you may not be so hot on those places that are very close to your work, like, I don't know, condos in Soma, although I haven't really looked at the details there. Soma, San Francisco, Financial District, South Beach areas. I haven't looked at the data there to see what's going on, but I would imagine that we may be seeing a little bit of slowdown there, while a pickup in our, kind of suburban, I don't call this the suburbs, I mean, I grew up in the city, so I don't really consider this the suburbs. But this area has probably seen a pickup. So imagine they're all making the same amount of money, the $200,000, $300,000, $400,000 a year salaries with stock options and bonuses and all these additional incentives, free food and carbs paid for and all that stuff. And now you can work from home the whole time, and you're getting paid the same amount. So of course you're going to be looking where you can shelter in place and with more swag, I guess would be the best way to say it. So that's, obviously that's not reflective of us and everybody living here, of course, but as far as the housing market, that's what's happening, and that's why things are where they are right now, based on my speculation, based on me reviewing the data. If you disagree, if you want to talk about it, hey, like I said 10 times already, feel free to give me a call. I'm here for you. Days on market, increased sales to list price ratio. Okay, so increases, yeah, jump, but mostly it's decreased. Mostly the sales price to. So what's another thing that's been happening is that we are not listing our homes for sale for that 999 to 1.3. And my buddy Sean here, who works with us, who's a realtor with the Joe Polyak real estate team, with Rise Homes, who's a realtor with us and is also working on our marketing side of things right now as well, he asked me today, he's like, well, why do you think that is? I mean, are people just not trying to play the game anymore, or not trying to do the bidding wars? My speculation is generally this, that realtors are coming to their clients and saying, look, the market has changed a little bit from being list at 999 or 1888 or 1988 and expecting 20, 30, 40% over asking, or even 10% over asking. Right now, we need you to price your home at a price that is going to bring us traffic, but also that you're willing to accept. If you're listing your home at 999, but you expect 1.3, you're not going to accept 1.15. So we're not doing that anymore. And another reason for that is we used to list it low to create a bunch of traffic and a bunch of activity, and just the open houses are full and all that stuff. Well, now we're not doing open houses. We're very picky on who can come into a house. Many homes are requiring a pre-approval and proof of funds before you even enter a home. And a bunch of forms are required to sign before you even enter a home, before you even schedule an appointment, whether that home is occupied or vacant. So if that's the case, we don't necessarily care about creating this crazy rush at the open house where it's like 30 people there at one time or 20 people there. So that might be another reason why realtors are telling their clients to do this. So Okay, that is me going into all of that in a lot of detail, and that's it. I won't go into, there's more data out there that I can analyze, and it'll basically just say the same thing. So to summarize, what has been happening in our market is nothing short of astounding. The world's, craziest pandemic, or at least the first pandemic since social media and we're all interconnected and globalization has taken place. So maybe we're just taking all these other precautions that in previous pandemics were not taken, due to obviously valid reasons, that you can fly from Wuhan, China to San Francisco to Amsterdam, to all these places, and the disease could spread very quickly. So for that reason, we are obviously cautious. And so to think that during that time, during something like this is happening, the San Francisco Bay Area real estate market has seen a record June, or San Mateo County at least, has seen a record median sales price for the month of June. I mean, I don't know, I don't gamble very much. Maybe for fun a little bit every now and again if I'm at a Reno or Vegas or something like that for some conference or something. Okay, but I don't gamble too much, but I am willing to bet that the odds, first of all, nobody had those odds, but if somebody had those odds on what the San Francisco Bay Area real estate market would do in June of 2020, if you took those bets on March 25th, starting on March 25th, I think the odds that somebody would bet and guess that it would be a record June 2020 would be like 10,000 to 1, and you would have made a lot of money. So anyways, that's it. That's all. Thank you so much. If you like this video, please don't forget to like it. Don't forget to subscribe. Don't forget to share it. Don't forget to do everything that you possibly can to help me, to help you by making more videos. Look forward to it, and hope I can help you with your real estate needs here in the San Francisco Bay Area.